Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to the channel. Also, hit that thumbs up button for me. It helps YouTube spread this video out to more people. Now on this channel, guys, we talk about how to make money. We talk about lifestyle, and we also throw in some supercars as well. That's a passion of mine. And I know many of you have that same passion. But today we're going to be talking about money, specifically credit score versus car loan rates. Now, if you've been following the channel for a while, you will know I'm a guy who finances all of my cars. And in order to be able to do that, I have to be able to put myself in a position to get the very best financing terms that are out in the market at any given time. So, having said that, we're going to talk about the credit scores that lenders utilize in order to decide what type of interest rate we as consumers will get on a car loan. Now, there are 5 of those categories. I'm going to go through them with you. Then we're going to talk a little bit about the interest rate that is associated with each category. And then we're going to talk about a car payment based on a $20,000 loan for each one of these credit score categories. Well, let's get started. So most lenders, I would say probably all lenders, look for 3 things when they're trying to decide whether they're going to make an auto loan to an individual or a consumer. The first thing they're going to look for is, do they have a steady job or monthly income coming in? Why? Well, they want to have a good idea you're going to be able to repay the loan. So that's the first thing they look for. The second thing they're going to look for is, has this individual or consumer been living at the same residence for at minimum 1 year? Because they also want to make sure you're not going to be a flight risk. If you don't make the payment, they want to have a good idea you're one of these persons that have planted roots and going to be where your address says you're going to be, just in case you default on the loan. And then the third thing they look for is credit score. And that's what we're going to talk about first and foremost in this video. The 5 credit score categories that lenders look at are super prime, which is credit scores of 781 to 850, prime, which is credit scores of 661 to 780. And then we have non-prime, which is 601 credit score to 660. Then we have subprime, which is 501 to 600. And then we have deep subprime, which is 300 to 500 credit score. Now, depending upon where you fall in those 5 credit score categories from a lender's perspective, they're going to offer you interest rates that coincide with where you fall on this scale of credit score. So let's take, for instance, the very best borrowers who the lenders consider super prime. They're going to fall between 2% to 4% interest rate. And I will tell you guys, that is absolutely correct, because that's the category that I fall in. And I typically get loans from the credit union that I use between 2% and 4% on all of my auto loans. Now, the next one, which is prime, which is 661 to 780 credit score, typically will fall between 4% and 6%. Non-prime would fall between 7% and 10%. And then subprime would fall between 12% and 16% on your interest rate for your car. And then the bottom one, which is deep subprime, which are credit scores between 300 and 500, will have to settle with interest rates of 14 to 20%. Now, when we look at credit scores range from 300, which was the bottom of the tier, all the way up to 850. So between 300 and 850, all of us will fall somewhere in between that range. Now, if for instance, we were a super prime, like I am, then if I was getting a $20,000 car loan for 60 months, which is my term, 60-month car loan, and I got a 2% interest rate on that car loan, my payment would be $351 per month. If I got a full 4% on my car loan as a super prime borrowing candidate, then my payment would be $368. Not a whole big difference there, but these are your very best rates you can get with, like I said, between 781 and an 850 credit score. Let's go down here to deep subprime. As a deep subprime borrowing candidate, my interest rate, if it was 14%, my payment on that same $20,000 loan is going to be $465. So the difference between a super prime and a deep subprime borrowing candidate from an interest rate perspective, from a payment perspective as well, is going to be $114 in payment. So $351 if you're super prime, and then $465 if you're deep subprime. So that's $114 a month you're going to be paying in interest to a lender because of your credit score being in that 300 to 500 range. Now, if we looked at the extreme on each end, so say if I'm super prime and I got the 4% and I'm at 368 payment, or if I'm at the deep subprime and I'm at a 20% interest rate, then my payment is going to be $530. Same 20K loan. So in this situation, I'm at $162 more in interest that I'm going to be paying to the lender because I fall in this deep subprime category. So that's why I'm telling you guys, that's why this is so important. The credit score is so important when it comes to borrowing money, especially when you're talking about auto loans, because of these 5 credit score categories that lenders stick you in as a prospective borrower. Now, another thing I want to talk a little bit about is how do you increase your credit score in order to get yourself from one of these categories here up to super prime? Well, in my experience over the last 25 years as a lender, as a commercial lender, and also as a consumer, as a borrower who goes out and, I get auto loans, I get home loans, I get credit cards, etc. What I've learned is the number one thing you need to do in order to be able to start increasing your credit score is you need to know what your credit score is. You need to know what's on your credit report. So check your credit. And the way you can do that is there's a service out there, a website called annualcreditreport.com. You can go on to annualcreditreport.com once a year and pull your credit at no cost. So that's the very first thing you want to do in order to start looking to increase your credit score so you can get up in this super prime borrowing category. You want to know exactly what's on that credit report, so go pull it. And then from there, once you find out what's on there, if there are things that are on there that are not yours, you can dispute those things. You can go to the 3 major credit bureaus like Experian, TransUnion, and Equifax, and you can dispute those items right online. And a lot of times, if those items fall off, you'll see an automatic increase in your credit score. The second thing I would tell you to strongly consider is pay your bills on time. So if you got things on your credit report like credit cards or a car loan or a house loan or a personal loan, pay them on time. Pay them prior to the due date or on the due date. Don't be late, because 30-day lates, they kill your credit score, guys. So that's the most important thing. Pay your bills on time. The next thing is, if you got revolving credit cards, then you need to make sure you understand what your utilization is. See, with credit cards, your score or your credit score is going to get dinged if you use more than 30% of your available credit limit. Let me give you an example. If I got a $1,000 credit card limit and I use 600 of that in any given month, so I've used $600 of my $1,000 credit limit, then I better either pay that credit card off in full at the end of the month, or I better pay it down to under $300, which will be under 30% utilization. Because if I got a $1,000 credit limit times 30%, that's $300. So I need to be below $300 in order to have good credit utilization so it doesn't hurt my credit score. So that's the third thing. Understand credit card utilization, your revolving limits, keep them under 30%, and that'll keep your credit score, or it'll actually help drive your credit score up. So if you got that same $1,000 credit limit and it's maxed, do everything you can to pay it down by $700 to get it to $300 to keep you under the 30% utilization limit, and that should drive up your credit score as well. And then the last thing, the fourth thing, is build new credit. For some of you guys out there who don't have any credit at all, and you're trying to figure out, well, how do I establish credit? How do I get my credit score up? You can do that through a secured credit card. You can do it through a department store credit card like a Macy's card. You can do it through a gas card that's being offered by, say, a bank or a gas company, because all of those credit cards will, whether it be a true credit card or a department store card or a gas card, they're going to report that information, how you repay them, to the 3 major credit bureaus. So that'll help you build credit as well. And then obviously getting more income, creating additional streams of income will give you more income so that you can go out then and also build new credit by maybe buying assets that create more wealth for you, like buying real estate. Will help create assets that'll in turn build wealth for you, but it'll also build new credit for you. Some other things that I would recommend you do as pre-work, if you're thinking about buying a car, I would go out online and search for lenders and figure out what interest rates are out there. Based on where your credit falls, based on our 5 credit score categories that these lenders are going to use, you need to figure out where you fall on this scale right here from 300 to 850 credit score, and then from there you'll know sort of what your ideal interest rate is going to be when you go start looking for a loan. And then all you got to do is just try to find the very best loan you can find prior to going to the dealership. What I always do is I go through a local credit union, and I go to the credit union first before I even start shopping for a new car. I go to the credit union, I already know how much I want to borrow. I'll go online, put my application in, get approved. They will send me a draft for the dollar amount I'm approved for. So now all I got to do is when I walk onto the car dealership is say, hey, this is the car I want, this is how much I'm going to pay, and here's the money for it. There is no haggling with the dealer about interest rate or the term on my loan or any of that stuff, how much I'm going to put down payment. I don't have to haggle or do any of that stuff with the dealership because I've already been approved at my credit union. They've already given me a draft, and all the dealer has to do is fill out their part on that draft, send it electronically to the credit union, and then they will deposit the money or send them a check for the car, and I'm done. So that's one of the pre-home work I would recommend you do is do some shopping for interest rates and term, and then if you can, get approved, get your loan ready to go, and that way when you get to the dealership, all you got to do is find your dream car, and then you're out of there. Well, all right, guys, I thought I would just give you guys some information about credit score versus car loan rates. I'm a big believer in doing everything you can to get to this super prime category, because that way you're going to get the very best interest rates, the very best terms, no money down, those types of perks you get as a auto loan borrower by being in the super prime. And then also we talked about some ways how you can work yourself up to the super prime category. Well, guys, drop me some comments. Let me know what you think. If you're stopping by the channel for the first time, again, please consider subscribing to the channel, share the video, and smash that like button for me. It helps the channel and it helps me too. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'll catch you on the next video. Peace. If you want 2 free stocks, Webull is going to give you 2 free stocks. When you open a new Webull brokerage account, put at least 1 penny in that new account. They're going to give you 2 free stocks valued up to $3,300. There's a link in the description box of this video. Guys, go get that free stock and go get that free money. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.